Y'all, why didn't we see this one coming with Trump? Look at this. Dow rises 700 points after Trump comes out and delays the EU tariffs. So this man announces a 50% tariff on the European Union. And then just a couple days, can't make this up. Hey, you know what? We're going to wait. Give them till July 19th. Let's negotiate some. Then the EU comes out and said it would fast track trade talks with us. And that caused the S&P 500 to snap its 4-day losing streak as the market bounces back. And look at this. We're almost at all-time highs on all these, on the SPY, on the NASDAQ, on the Dow Jones. Wow, it's like a great time, isn't it? Well, not so fast, because it's the end of May. And what's that saying in stocks say? Sell in May, go away? Well, I read an article on that today, and it was saying usually that's a myth, but we got a couple concerns on our tables right now. We got corporate profits as a concern because will they grow reasonably to justify these valuations? Some don't think so, but this article I read right here, despite tariff-related anxieties, few companies are pulling their forecasts by Bill Peters on MarketWatch. I was reading into it and it said of the 259 S&P 500 companies that offered commentary on their profit outlook for the year, only 8 have said they would withdraw or otherwise hold off on updating their full year's earnings per share forecasts. Of those 8, 6 cited uncertainty directly or indirectly related to the tariffs. And while we're on the tariff topic, 2,136 companies have mentioned tariffs on earnings calls for quarterly reports. So there's a lot of uncertainty still in the market, and sentiment is also another big concern with it coming out. We got some consumer sentiment data, and that's came out the second lowest since the 1970s. So this is for sure an event-driven market we're in. You could see a lot of lows, a lot of highs, and it's a lot of volatility, and none of these negotiations are over with. We just keep on getting temporary reductions. And I don't know if the market's thinking about this or not, but we're near all-time highs again, and it's really tight out there in the economy altogether. Goldman Sachs economists expect the tariffs to raise prices but not necessarily surge inflation. They're expecting the economy to slow down. They did mention, though, that the labor market is okay, and something that they want to watch is kind of see what happens with PCE, although the economist at Goldman Sachs thinks that PCE is going to go up to 3.6% later on this year, which is up from the 2.6% in March that they expected. And think about this. The Fed's goal is 2%, so if we're going from 2.6% to 3.6%, that's further away from the Fed's goal, and that's not what they want, right? Now, things are looking pretty jolly in the stock market, though, because near all-time highs again, and it's really just been a lot of buy the dip, buy the dip, buy the dip, and not so much fear in the market. This is the fear and greed index, and you could see that we're hovering around in greed. We're at a 65 right now. We're not in extreme greed yet. We're just in greed, but greed is greed. And fear lacks in this market, and retail really shows that they're not scared to buy this stock market dip that's going on right now. And I was reading this other article out there, and it was talking about how fear and greed are something that people in the market should consider, but there's the third variable that a lot of people aren't considering right now, and it's overconfidence. And then it started talking about how when people's overconfident, they think they know more than they really do. And we've all been there. I'm one of them people. And it causes you to go really heavy into positions just because you're so sure about your intellect, about your about what you think you know, causing you to take risky positioning, and it could hurt in times where the markets aren't just going up. And I've been seeing a lot more articles lately talking about how people have been rewarded for buying the dip, and it's really this retail what's this word I'm looking for? Occasion that's going on to where all people know is just buy the dip no matter what, and it does good. And I seen this other article and it was talking about how people are okay buying the dip now, but because of this and with the stock market reaching near all-time highs again, if even if we reach new all-time highs, that's when this fear and greed is going to be scary because people are going to be offloading the gains from these phenomenal trades they made, is a good way to put it. Now, they went on to talk about how high valuations are a problem. So, Wall Street has a consensus for the S&P 500 as earnings per share for this year at $250.66. That's down 4%. That's now down 4% to $241.33. So, Wall Street's consensus for S&P 500's earnings per share has gone down 4%. Yet stocks are trading higher than they have the beginning of this year. And then think about high economic uncertainty right now. So there's this thing called the economic uncertainty. Let's look it up real quick. Economic policy uncertainty. Let's look at this together. Believe. Yeah, here we go. Let's just put this on like a 7-year. Let's kind of zoom in a little bit. So it's high, but we're starting to trend even higher. And things are really uncertain right now with tariffs, and especially, we don't know where it's going to go. And then there's the third leg to this stool. So we got high valuations with PE earnings expected to go lower. Then we also got this high economic uncertainty going on. And then what else do we got? High rates, y'all. Rates are still high. That's still a thing. And yet, stocks are near all-time highs again. So that just goes back to this warning that I seen that buy the dip probably isn't always the best thing. Fear is missing out right now. A lot of greed in the markets. And then that other one that it mentioned, overconfidence, where people just think they know it all. In a time with high economic uncertainty and high rates. So what's going on with Bitcoin these days? Let's look it up. Bitcoin USD. It's BTC USD. There we go. Let's just put this on the one chart. So we're still near all-time highs for Bitcoin. Let's zoom this out a little bit more. See where we're at. Put it on the 1 month. That looks kind of messy. Ah, that's interesting. So you see how it's like that V? That's kind of how the stocks looked too. Let's just put this up to QQQ, NASDAQ 100. And then let's put it out on the day chart. That's interesting. I haven't looked at it yet. So while this is loading, some of the news we got on crypto today. It looks like it hasn't bounced too much. It didn't go to a new all-time high, although it's near all-time highs still. Look at the similarities on those charts. Wow, they're both just like these V's. Interesting. But we had some news on Bitcoin today. So MicroStrategy bought more Bitcoin, bringing up their total owned coins up to 580,250 tokens, worth about $40.6 billion. And Michael Saylor, the CEO of the company, said that I only buy Bitcoin with money that I can't afford to lose. And they're like raising debt to buy Bitcoin. Also, GME, GameStop announced that they're going to start buying some Bitcoin. And then DJT stock, Donald Trump stock, announced that they're going to raise $2.5 billion to buy Bitcoin. So Bitcoin seems to be the play right now. And look, the stock market's kind of lagging its performance. Hold on, when was this? So January. This was like February. So it kind of seems like the market's lagging back about a month. Hold on. Let's just look. Can we zoom out a little bit more? All right, so it looks like Bitcoin hit a high around January 20th. Where was January 20th on this chart? Huh. And then what about when Bitcoin, so stocks bottomed out April, when was this? About April. Interesting. So it's all happening around the same time. It's just the stock market hasn't reached a new all-time high while Bitcoin has. And this is a crypto-friendly administration in the White House right now. So we'll just keep on watching this and seeing how it goes. Now, I wanted to talk a little bit about housing now because we've gotten more data all over the place. So home prices fell 0.3% in March from February, and this is the first monthly decline on a seasonally adjusted basis since January 2023. Now, this is interesting. So home prices fell for the first monthly decline in a seasonally adjusted basis. And there are a few different things affecting this. So we just talked about the things affecting the stock market. And I wouldn't necessarily say it's much different for the real estate market because these are the same consumers impacted. There's still high rates. Real estate's still expensive. So all-time highs for real estate or for houses and property. And then the same deal with economic uncertainty. But with the housing market, there's more. Wait, there's more. So 2 in 5 consumers think that now is a bad time to buy. That's what they told Fannie Mae, or to sell a home. And there's a few different denominators that play into these factor-wise. So there's this lock-in effect. They got low rates during the pandemic. So why would they sell their home that they got like this 3 or 4% mortgage on and then buy a more expensive home at higher rates today? So that doesn't make sense, right? So that's causing people not to want to sell their home. Then think about the affordability and credit concerns. Home prices are super expensive. Credit's kind of tightened a little bit, especially with where these treasury yields have ended up. What's the 30 years over 5% right now? That's like crazy. 10-year treasuries at like 4.5%. So it's a tough time if you're trying to borrow to buy a home right now. And then just as far as the credit goes, here's just more to throw on the Bay of Hell, Oklahoma saying, I guess. 5.6 million borrowers are considered delinquent on student loans in the first 3 months of this year. So that's even more borrowers who can't qualify to buy because they're delinquent for the student loans that just kept on getting kicked down the road, and they got used to not having to pay these student loan payments, and now it's like they're due, but everything else is due too. People are buying groceries on buy now, pay later. I just seen this article on Instagram and it said you can now finance a Costco hot dog, and it was like 33-cent payments every week for 4 weeks. That's completely crazy in my opinion. And then there's this other thing that's really causing people to think it's a tough time to sell a home, just because there are these builders out there who are building brand new homes and they're doing price reductions on top of buying down the rate so that buyers are able to get a lower rate on their homes. Now, that isn't the only part where we're economic data wise, where we're seeing some tough data. We also got some ship data. So departures from China to the US, which track the total volume of cargo carried by containers on a rolling 15-day total. In mid-April, companies are trying to import as much as they can to front run these tariffs when Trump announced these tariffs on all these other countries. So people are like, all right, we got to hurry up and buy, hurry up and buy. We don't know how it's going to be in the later half of this year. So that front running of tariffs, we've seen about 76 vessels or ships with the tonnage around 580,000. Now, the most recent reading came out to, wait, where's the drum roll? 38 ships, 300K in tonnage. And then we also seen business capital goods orders dropped 1.3% in April. So this leads us to the question, whether or not we're seeing less confidence from businesses. But that's just business confidence, because we got something else today. We got consumer confidence data. And what we're seeing, and that's why I put these stock charts back up, consumer confidence index in May landed at 98, up from April's revised 85.7. And this is really due to the US and China trade talk truce that went on. But we did see an increase in consumers saying that it was hard to find a job. It came up to 18.16, which was up from 17.15. Now, there's a few things we're watching. And before we get into what we're watching later this week, let's talk about yields, because we got a huge announcement from Trump today, if you want to consider it huge. Trump posted on Truth Social, "I told China, which is very much wants to be part of our fabulous Golden Dome system, that it will cost $61 billion if they remain a separate but unequal nation, but will cost $0 if they become our cherished 51 state. They're considering the offer." And reading this, I just thought about it for a minute. Like, all right, man, like, it seems like he really wants Canada join us right now. Okay, what impacts could that have? And it just sent me down this whole rabbit hole. And then it made me ask, what's Canada's GDP? And it was like 2 trillion, let's say. But they're running a deficit, so I want to say 85% of their GDP was debt. So we'd technically be taking over that deficit and including it to ours, so that would mean more government spending, which would mean more need to issue treasuries, which would raise the yield in a case. So it led me down this little rabbit hole, and then I asked, and I wasn't like trying to like complain or like shoot shots at anybody. I'm just literally curious. And I said, can someone explain to me why Trump would want Canada to join the US just right now, thinking right now terms? Wouldn't that further increase the national deficit on top of the big beautiful bill, which is also expected to increase the national deficit, thus increasing the need for the US to issue more debt, in result raising borrowing costs for people in the US even more, since interest rates follow these treasuries, and further slowing the economy? Just trying to wrap my head around this one. Would slow GDP, heavy upfront costs, and how would the universal health care work? Because Canada has universal health care, and doesn't Canada also run a national deficit themselves? This person, it seems like they just straight up attacked me. Your thinking is so 20th century, you're not paying attention to the here and now. The Fed is about to be dissolved. It's a private corporation having no government status at all. The Federal Reserve note in your pocket is fiat currency and is based on nothing more than thin air. The debt is phony because we, the people, have been fraudulently enslaved by taxes and debt that we had no say so in. You probably don't want to hear or believe any of this. Easier to sit back and wait for the fake news to tell you how to think. Just remember, fraud, I don't even know how to say that, vitiates everything. Wow, that was deep. But you know what else is deep? That national deficit that's just going to keep on growing. So I was just thinking about that, and coincidentally an article came up today, and it was talking about Besant's plan to really lower long-term treasury yields as close as this summer. So they're talking about Treasury Scott Bessent's talking about how he plans to lower the treasury yields by lowering the supplementary leverage ratios for banks. And this SLR, let's just say, call it that, was established in 2014 to ensure that banks have sufficient capital relative to their leverage exposure, pretty much to absorb losses if they came in, or be solvent. Now, the current is around 5% for the 8 globally systemic banks, so the huge banks, and then 3% for other banks are the ratios they put them at. This allows them to hold, assuming that they lower or adjust these, it'll allow them to hold more US government debt, lend more freely, or even both. So it kind of seems like a real similar to QE. And of course the banking sector supports it, but yeah, they haven't said for sure yet. They're just saying that the talks between the Federal Reserve, the Office of the Comptroller of the Currency, and the Federal Deposit Insurance Corp, the FDIC, are all just talking about it. And it makes me think, like, all right, if these banks are going to buy up government debt, um, and lend more freely, I, it does kind of sound risky. And then it takes me back to this chart right here. I mean, it's just interesting that stocks haven't broken new all-time high yet, and Bitcoin has. So, what are everybody going to be watching coming up this week? So, Tuesday's behind us. We got durable goods. We kind of mentioned home prices, consumer confidence. We had some Fed speak. Tomorrow, we got minutes from the Fed's FOMC meeting in May. I know a lot of people are going to be watching for that one. A lot of people. And then also for Wednesday, we got Bank of Montreal, Bank of Canada, Macy's. Probably the largest here will be Nvidia, but we also got Nordstrom, HP, Elf Beauty, C3AI, Salesforce, U-Haul. So there's a lot of information that's going to be coming out tomorrow that could give you insight into the consumer. Now let's keep going because like I said, we got a busy week ahead of us. Thursday, initial jobless claims, GDP. We still got some more Fed speakers, pending home sales, more Fed. Then Friday, personal income, consumer spending, PCE. This is the one a lot of people is going to be watching to see how these tariffs are impacting, because the PCE is the Fed's preferred measure for inflation. So all eyes are on PCE and really Nvidia this week, and also those Fed minutes. Also, advanced U.S. trade balance in goods, retail inventories, wholesale inventories, Chicago Business Barometer PMI, consumer sentiment, more Fed speak. I wonder what else earnings we got, because I only looked at the 28th. So 29th, we got Hormel Foods, Burlington, Foot Locker. Wow. Kohl's. Build-A-Bear, yeah. American Eagle, Ulta Beauty, Dell, Gap. Wow, these are some good companies. Shoe Carnival, Canopy Growth if you're into the cannabis, watching the cannabis, nothing the 31st, nothing the 1st. So y'all, we got a busy week, and we just kind of talked about what all to watch this week. I know for a fact, Nvidia. For a fact, Fed minutes. For a fact, PCE is what everybody's going to be watching this week. So that was a lot of news to wrap up. We're done in just over 23 minutes. Hope this video was valuable. Hope Memorial Weekend was great for you. I took the few days off and didn't make any videos. I wanted to, but there just wasn't enough news out. And then today we got a banger, a surplus of news. So here I am, and I'll be back tomorrow. Y'all have a good one.